Good afternoon, everyone. Thank you for having me. I'm Tamara. It's an honor to be here moderate this panel, Tokenization into the Mainstream. And I'm thrilled to be joined by this remarkable lineup of experts, each representing key stakeholders in this evolving market. Tokenization has been a major topic in finance, promising faster, safer, and more efficient transactions. But we are now moving beyond the theory. So banks, central banks, and financial networks are integrating tokenized assets into real-world applications. However, challenges remain, from regulation to technology and interoperability. So today, our panelists will share insights on what's happening, what's working, and what still needs to be solved. We will start with a discussion and then followed by an audience Q&A. Thank you so much for being here. Let's start with a short round of introductions. Alessandro.
Thank you for having me here. I'm Alessandro. I'm from the Central Bank of Brazil. I'm an engineer by formation. I work in the telecommunication industry for some years before coming to the central bank since 2010. I'm a financial market infrastructure specialist in the central bank and also the project manager of our CBDC project, DREX.
Okay. Hi, everyone. I'm Nick Kerigan, Head of Innovation at SWIFT, and it's wonderful to be here at the Digital Euro conference today and to join you for these inspiring set of conversations. As part of my role at SWIFT, I lead on what we call New Frontier Trends, which includes the whole space of digital assets and digital currencies. And in particular, my team has been leading all of the collaborative innovation efforts around digital currencies and blockchain interoperability that we've been doing over the last few years. I have 25 odd years experience in payments and banking and was recently rather depressingly introduced on a webinar as a payments veteran. And I didn't think I was so old.
Thanks, Nick. Hi, thanks. My name is John Ho. I'm currently the Global Head of Financial Markets Legal for Standard Chartered. Besides that, I do a lot of new initiative within the bank, right from digital assets to tokenizations and AI, and how do we bridge that and use that for efficiency, advancement, and the topic today is very topical and relevant for those who are involved in banking and finance. Thank you.
Thank you, John. Humphrey, I'm with Partior, also an engineer by background, then lost my way and went into banking, but finally came back into technology. Partior is a technology company. What we do is we use blockchain to try to solve for the traditional friction in cross-border payment and creating opportunities that DLT technology offers. The gentleman next to me represents one of my shareholders, so we will say the same things. So it's just disclosure to everyone that we sit on the same side, and looking forward to this discussion.
Amazing, thank you. So I'd like to start by setting the scene. So Nikki, SWIFT has been leading experiments in tokenized assets. What's the biggest shift you have seen that signals tokenization is moving beyond the hype?
Yeah, I mean, I think this is what I really feel, that actually tokenization is kind of now really ready for takeoff. I mean, we've seen some big numbers predicted. BCG predicts that $16 trillion of assets will be tokenized by 2030. Standard Chartered predicted that 30 trillion will be tokenized by 2034, so in roughly 10 years' time. So we're seeing some major predictions, but I think what also then reinforces actually that these things are starting to happen is that there is real issuance going on. Obviously in Europe, we've seen issuance by KfW and EIB, amongst others, but we also see the growth of platforms that are starting to use tokenization to deliver on valuable, commercially relevant use cases. So, for example, platforms that enable the use of collateral and intraday repos, which is of real commercial value to financial institutions, and those platforms are growing, volumes quite considerably month on month. So, I think this is a space that's really starting to open up. As an innovator, I always look for what we call the S-curve of adoption. And, a number of years ago in another life, I was part of the rollout of contactless payments in the UK. And that took 10 years, right? And lots of people said for 10 years, that's never going to happen, it's never going to happen. And then suddenly there was a behavioral change. There was triggers for that behavioral change. And now contactless payments in the UK adjust the way you make payments in store. Nobody thinks about it. And I think now we see a lot of changes happening in terms of the geopolitics that we heard about in the morning that are actually going to be the stimulus to really drive this market and make this market grow. So at SWIFT, we've been very much active in this space because we believe, and we'll come back to this topic of interoperability is really important, but we believe that it's going to be really important to support the community moving now from experimentation and POCs into live movements of assets and trials, and that's exactly what we're doing with the solution we've developed.
Turn to you, Alessandro. We know that Brazil is modernizing its financial system with initiatives like PIX and DREX. How do tokenized assets fit into this broader transformation, looking from the perspective of the central bank?
Nice. The tokenized assets, they have a very specific, let's say, way. It's defragmentation. That's what we think, right? Inside the tokenized, it has inherently defragmentation. And this is very important because it doesn't matter if you have tokenized assets in different silos, and you cannot talk every silo with one another. It's too difficult to interoperate. So we try to bring everything in one basket and to make it easy for everything to fit and everything to be changed, one token for another. So that's our general view of the tokenization. This is the most important for us characteristic of the tokenization. Bring everything together so it's easier to provide something valuable to the society. Something cheap, something fast and transparent in the way that we want to go and provide the market with a level playing field, that they can build something valuable above common and public infrastructure.
John, looking for the banking side, what's the most compelling reason for bankings to adopt tokenized deposits or tokenized real-world assets? And what advantages do they offer over traditional systems?
Yeah, I think the couple of advantages tokenization is able to cross the bridge between traditional payment rails, settlement rails with the new payment rails. Because I think the ability to move collateral, the ability to transfer asset of value and monies at speed, at a fraction of the price, is certainly the attraction that tokenization offers. I think before we get too hung up to say, oh, tokenization will have been promised, why are we not seeing it? I think before I start, I just want to go back to basics. When we look at tokenization, there are actually 3 different spectrums of tokenization. The most basic form of tokenization is just books and records, just as like a receipt, or what you hold, or representation. The second type of tokenization is what we call the digital twin. So you issue a digital representation of assets of value, but your pre-trade and post-trade settlement, some of them may change, but some of them hasn't changed. The more advanced version of tokenization is what we call the digital native. The representation of assets means that asset doesn't exist in the real world. For example, digital native securities. Now that we have tokenization of carbon credits, tokenization of intellectual properties, these assets, the value of which rests and recorded on a blockchain and move at scale. So when you look at tokenization, we need to understand what actually do you mean, right? And the potential is huge in a sense, as I mentioned, the ability not just to move assets of value, but also to have composable exposure to the types of assets that you want, and ability to actually settle and move assets in real time. It's what attracts a lot of the ecosystem at play. As we speak, the initial view of, for example, fiat-based regulated stablecoin was largely used in a speculative digital asset space. Increasingly, we have large conglomerates, large commodity players, large export importers are looking at how do I move assets, or how do I move money, at the same time reducing the frictions, the time lag that we see in some markets. So I think that's something to bear in mind. So it is something that we see has the ability, as what Nick mentioned, to unlock the value, whether it's 16 trillion, 30 trillion, but the number is huge.
Maybe a follow-up question. We know that Standard Chartered has been involved in several tokenization projects. Can you share a real-world example where tokenization improved efficiency or security?
Yeah, I think one of the clearest example, which is what public, we assisted China Asset Management to issue its first tokenized real money market funds out of Hong Kong. It is the first retail money market funds in the whole of Asia Pacific. The reason why they're doing it is just not to tokenize for the sake of tokenization. Is actually the ability for clients to move their exposure within the value chain. For example, the client might have exposure in a bond, exposure in equities. They also can have composable exposure at scale at a fraction of the price.
Humphrey, we know that Partior is backed by major banks for interbank settlements. How does your infrastructure make tokenized finance scalable?
Yeah. I think I'll give first another example of Standard Chartered. They also had an investment in a company that did an FX PVP in Asia, and it was us. So it was also a very cool thing to use the rails for. Back to your question, I think what you see, and I think we're very proud because Partior, compared to many other initiatives that do tokenization, is live. So what you see is the banks on our rails. We have unlimited approval from OCC to tokenize US dollar to move the value without a limit in value or volume. So it's not a proof of concept, it's not a white paper, it's real life transactions that are happening. And I think that is also what Nick alluded to. We need to move away by working together to go from the laboratory stage into solving real problems in the real world. And I think that only happens by working together. And what we're doing is day to day. We also work with Brazilian banks and did a submission and application with a Brazilian bank for DREX. What you see is we need to work together because the friction, and I will start with our primary use case. What you see is that in the traditional payment space, there's so many barriers due to legacy technology that in the interaction with SWIFT and ourselves, we can make things more efficient, more predictable, and faster. And then I think at the same time, and it's not for my customer, Standard Chartered or JP Morgan, it's for their customer. We're really using our technology for an end use case that makes sense in the real world.
Nikki, you mentioned interoperability before, and you know that SWIFT's tokenization pilots focus on interoperability. So what lessons have emerged on how tokenized assets integrate with the traditional finance?
Yeah, I mean, I think the headline from our work is that interoperability is hard, but it's necessary, right? And why is it necessary, right? It's because what you see across all of this space of tokenization is that different platforms, different standards are being used, whether you are talking about digital assets, whether you're talking about digital money, whether you're also talking about digital trade, which is equally important topic here. Now, all of these things can, in principle, be represented by tokens, but when they are on different technologies, what the risk is that you end up with digital islands emerging. And we saw that previously in the digital trade space, where you had digital trade platforms that didn't work with each other and therefore struggled to scale. So we think interoperability is vitally important to enable these markets to be able to scale. And I think you've got to bear in mind as well, with all the discussion we've had already on digital money, money is typically used for something else, right? So if I want to trade a digital security, I've got to have a cash leg for it. And the same with a trade, right? If I'm going to make a trade transaction, I need to have a money leg. Or indeed, if you think about tokenized funds and the work we recently did in Project Guardian with UBS Asset Management, where there was a conditional issuance of tokenized fund, and that was then paid for through the SWIFT rails, and we issued the confirmation back to issue it to investors. So we do think the interoperability is absolutely key in this space to help scaling. I don't think there's going to be one solution to interoperability. We will help enable it in the ways that we can, but there will be multiple different solutions in this space. I think, though, you need to be able to both interoperate between the new and the new, in other words, the new networks, but also you need to be able to interoperate between the new and the existing, because the existing structures, be they for payments or securities, are going to continue to exist for many years to come, and therefore being able to then interlink what we have in terms of the new and successfully orchestrate transactions across to the 11,500 banks and corporates that are already connected to SWIFT is for us equally important. And that's where I think you'll start to see the growth of secondary markets, be they in securities and FX, which is, I think, the next stage of development for tokenization.
Entering the challenges, so Niels just mentioned in the keynote before, some challenges looking from the perspective of the central bank. So Alessandro, how do regulators balance innovation with financial stability when dealing with tokenized assets?
Yeah, this is really challenging, and we central bankers do this very, very carefully, and that's why you have this a lot of proof of concepts and testing. But in tokenization specifically, we try to bring something into the society that will have bring some values to the society, to the customer, to the small business. And when we are trying to do that with a new technology, we try to experiment a lot of things, and we end up in the case of the tokenization. There is a lot of challenges, because we take one thing that in Brazil, imagine a lot of jurisdictions, you have to have privacy. So it's an open and DLT, for example, and how do we protect the information, right? We have been evolving in this, but there are a lot of small problems that we have to make sure that no one never can see what's happening there. That's very difficult, right? But trials and the openness with the society, with the market, and help from everyone, and everyone's trying together. This is positive. This is what we are trying to achieve. And by the end, it's new services to the user, and it has to make a certain quality. It's very difficult. We are trying. We'll get there, but we need help from everyone. So.
Yeah, another challenge is the regulatory uncertainty. So John, we know that it's often cited as a barrier for the adoption. What regulatory clarity do banks need to scale tokenization initiatives?
Yeah, I think in order to scale this, we all need to speak the same language. right? In many markets, what is deemed a commodity, tokenized commodity, could be deemed as a tokenized securities. And that's also partly because there has not been a globally defined term on a number of what the tokenized, underlying real-world asset is. Is it a security? Is it a tokenized cash? I think we all need to have a very clear definitions, because if you look at US alone, right, a BTC could be a commodity one from a CFTC perspective, from an IRS perspective is a property, and then from an SEC perspective with certain features it could be a security. So I think you've got to look at it from the perspective that we need the same definition, same taxonomy, so that we can standardize the definition in how that's being treated. The second aspect to that is standardization of terms, right? When we issue payments right now with ISO 222, all of us are subject to the same requirements, what we need to do. When it comes to tokenization, at this point, because it's so nascent, there are some initiatives like from ICMA, right? Doing a tokenized bond, certain things you need to go in terms of how you define the fields. But that is still very nascent. We need standardization, not just definition, standardization of how a digital bond will look like, a digital security will look like. And earlier we talked about interoperability, right? The connection between private to public permission blockchain is still a challenge. Scalability is still an issue. There's some latency going on. And last but not least, the issues relating to travel rule, right? The KYC AML rules. FATF have actually did a recent survey that more than half of its member countries have yet to implement travel rule in the manner in which they regulate and looked at risks relating to illicit finance. But until and unless you have travel rule adopted across the globe, you will have friction in the process. So when we look at tokenization at scale, public and private sectors needs to collaborate across the whole sort of items I talk about, because once we are on the same page, we will get scale.
Yeah, maybe I could add to that, because I'm going, as opposed to violently disagreeing, I'm going to violently agree with John on this point. The importance here of standardization cannot be underestimated. And I'm a strong believer, I think all of you are, in the power of collaborative innovation. Most of what we do is highly collaborative. And so the work that's being done at the moment around different use cases, DVP, PVP, etc., what we need to do is to then take that work and bring it together in some form to create market practices, to create reference implementations that will be able to be used across the industry. We're aiming to help kind of convene people around that, and we're open to everybody kind of joining us in that journey, because it's crucially important that we bring together these standards, like seeing, for example, the bond data taxonomy. Yes. We import that into the blockchain world, and then we're able to then use that as a reference. And I think that will be very important to unlock the growth of the market.
Great. Maybe continue with you, Nikki. So we know that SWIFT plays a key role in these global payments, but the fragmentation could be also a problem, right? So how can tokenized assets integrate with the existing financial networks without creating this fragmentation?
Yeah, it's a very pertinent question, and especially with all the sort of things going on in the wider environment. I mean, we are obviously very concerned about the potential of financial fragmentation. We actually recently published a report together with The Economist that talked about the risks of financial fragmentation, and that could result in a decrease in global GDP of up to 6%. So that's a pretty significant impact on the world economy if we don't deal with this. Obviously, we can't influence geopolitics, but what we can influence is, hopefully, is some of the ways that the new systems come together and to design them right from the start. And what we've built is a way to integrate with a number of different blockchains and a number of existing financial systems, and a way to then orchestrate transactions across those different systems, because connectivity is necessary, it's needed, But unless you can actually orchestrate transactions, it doesn't have real value, because you need to be able to transact for real use cases. So we're going down that path. We're on that road of doing now live transactions to be able to demonstrate that works. And we'll increasingly connect in different, multiple networks to enable that, and to hopefully help solve some of this complexity. Obviously, we can't do that alone.
Yeah. Humphrey, you was agreeing with John when he mentioned the challenges. We know that Partior operates across multiple regulatory environments. What are the biggest challenges in ensuring compliance while maintaining efficiency?
Maybe it's also more fun if we start disagreeing in the panel. Yeah. So, to start with Nick, it's not a real disagreement, but I think the connectivity of the systems is not the real issue. It's not the real issue. I think, from my perspective, representing a technology company, it's the rules and the fragmentation of compliance, KYC rules, governance, difference between the Eurozone and the US zone, Brazil having its own framework. I think from a technology perspective, I can build the universal KYC engine. You know, it's almost stupid. It's sanction list that you compare to transactions and the beneficiary and the payer. It's the treatment of the different jurisdictions and the interpretations that make it complicated. So I think, to an extent, this conversation of making it really possible in the real world for tokenization to take off is more limited by the differences. That, maybe I should say it differently. If we look at the real opportunity of tokenization, is that we're creating and designing a global framework and a global technology, but applying local and domestic rules which make it necessary to make the technology more complicated. So I think we're shooting ourselves in the foot a little bit, but it's not for the technologists to solve, because we can do it. It's more at supranational level and the regulatory level. So maybe you can jump in.
No, yeah, I agree. It's there are two views here. From the central bank point of view, there is the internal jurisdiction problem that we want to bring real assets, real-world assets, and the current infrastructure into a better infrastructure. And then we try to do that by defragmenting the most we can, so we can avoid interoperability, not only the building of the interoperability, but the maintaining, which is also complicated. So the most we can eliminate on that, we are going to try and do it. But this does not eliminate the need for interoperability, because there is always a little bit that's, let's say, we do it for 95%, but we still need to integrate with the legacy systems. So we try to migrate, and instead of interoperate, it's a little bit easier. And there is the cross-border, right? And this is for real assets, real world assets. So now to virtual assets, and there is another level of complexity. So we start by regulation and very carefully, and how do we integrate that? I think this is a big issue, right? You're right. We need to, in supranational levels, get an agreement, which is super difficult, right?
Yeah, I think the other thing to bear in mind, it's not just about the technology also. It's coming together. One of the things that we could unlock very quickly is to have a concept called digital identity, verifiable identity, because one of the friction points with respect to scaling this is the back all about it takes time to onboard a new client or new person, because they're all different standards. If we come up to standards where it's a verifiable digital identity, whether from an LEI perspective or with all the relevant details that can be shared through safe channels, that can scale this in the sense that client can be onboarded, in the sense that we know what the client is assessed at from a KYC, AML, all the relevant information is there in real time. that to me is where you probably reach a utopian stage that you can actually scale, because we're all looking at a client from the same lens of risk, licensing, rating, and I think that's really, really key. I know there is a number of initiatives out there to resolve that, but unless we have the same way of looking at onboarding, that is one of the challenges that we need to resolve.
Yeah, I mean, maybe in the interest of debating a bit on this, I mean, I do agree that in an ideal world, supranational kind of regulation or alignment would be desirable. But I also think in the private sector, we can't abrogate our responsibility here, because we can adopt things like as you mentioned, identifiers. I think about the ISO 20082 standard for payments, right? The industry came together and chose to migrate to ISO 20082. It's been quite a long journey, obviously, and we're still not done. But that was the industry's decision, because people saw that it was needed for compliance purposes, but also the opportunity then to have richer, more structured data was something that the industry wanted to go after. And so I do think it's we can't just say, we want the regulators to sort it out for us. We also have to take responsibility of thinking about how can we advance this and get to better outcomes, knowing that we will all have to align and probably invest in order to achieve those benefits.
And now looking ahead, look for the future. John, do you expect that tokenized assets to become a mainstream banking product? What still needs to happen to reach this stage?
Yeah, I think before I answer the question, I think most importantly, close to home here, is to look at the growth in Germany in terms of the tokenized bond market is a really growing market. Last year I was in Switzerland, where the Swiss National Bank indicated to us the whole of 2024, the number of bonds, digital bonds issued in Switzerland have exceeded $1 billion from the Swiss francs perspective. Right? So the numbers itself shows that this is only going to scale, right? But to your point, what does it take to move the dial? I think apart from what we discussed, the other leg that is missing, we need a digital form of cash settlement. Earlier today, I talked about whether it's a digital CBDC or a tokenized deposits, or a regulated stablecoin. So I think we want to live in a world where we will have a number of alternative payments that the regulators will accept, so long as it's within the same, subject to the same activities, same risk, same regulation. And I think if we live in a space that we have those digital payments that can move monies at speed, that will move the dial.
Humphrey, some believe tokenized finance could eventually replace traditional banking infrastructure. Do you see tokenization as a complement or as a disruptor?
A complement. I think it's the whole discussion we had prior to this, interoperability. I think tokenization will add functionality and use cases. It's not there to replace everything. I think, like the Americans say, if it's not broken, don't fix it. I think there's many things that go well. I think the real opportunity of tokenization is to find use cases that were impossible with the traditional rails and create new opportunities. Otherwise, it's throwing good money after bad money. It's not good business sense, I think.
Alessandro, how do you see tokenized finance evolving in Brazil's financial system over the next 5 years?
Yeah, what we are trying to build and is focused on the user experience. And this is important because tokenization by itself, if it is done by different silos, you only improve the back office of each bank, right? If you don't have any connections for new use cases, and so what we are trying to build is a central bank anchor. Like you said, it's important for everything to connect, and this is the wholesale CBDC as an anchor for everything. and then tokenized deposits and tokenized assets and tokenized electronic money, because everything has to connect on the second layer of money. So how I see it in the future is the user will have much more freedom changing assets, because our project is not only about money, it's about assets as well, tokenized assets in the same. I'm talking about real assets and real world assets. In case of DREX, we have regulation for virtual assets, but DREX is focused on mainly in the first phase for real assets, right? So we are trying to build something that makes it easy in a field that's provided by to the whole society, as a level playing field, and the market can build a lot of good services above it. And we'll be sure that it's natively interconnected. It's easy to do whatever they want to do with the ideas the central bank doesn't have, but they have, then they will improve the stack, right? So that's our vision for the project.
And for you, Nikki, what does a future look like where tokenized assets move seamlessly across financial networks? What is still missing? We already mentioned some things, but if you might mention one important thing.
Well, I mean, I think in this we've got to raise our eyes up a bit, right? Because actually, if you keep your eye on the future, right, and you think about, in principle, anything can be tokenized, right? And that to me is potentially really exciting, because you're then abstracting from the silos that today exist. And if you think about that anything can be tokenized, then the ability to then coordinate and program things in a much better way becomes quite real. So in all the work we've done so far, the ability to program and coordinate and automate things, so, a goods arrive in a port, I have to make a payment against it, yeah? That's hugely manual today, but then we can actually start to automate that. Likewise, I make a securities transaction and I can settle against it, or I can put the entire life cycle of a tokenized fund onto a chain and coordinate the payments against it. Or indeed, I look at the, FX PVP settlement, where there's a growing growth of currencies that are today not settled on CLS, but they need to be de-risked and we need to reduce the settlement risk. Again, if they're tokenized, then we can successfully coordinate the PVP. I think these are the sort of like the things that we need to keep our eye on, because, as Humphrey very rightly said, these are the new use cases that can be unlocked that are not possible today, but that tokenization can give us to do that. You ask what's missing? I think we've actually come quite a long way, but I think what's so far kind of missing is the ability to coalesce around how are these flows going to really work, and how are we going to not do those flows like one-off or for like one particular POC or one particular kind of jurisdiction, but how are we starting to establish patterns for those flows and definitions for the things in those flows and roles and responsibilities in those flows that we can all align on. And that then I think then starts to create then a momentum around the market, because it means that people know where they stand. They know, okay, if I'm going to play this role, I'm going to expect to do this thing. I'm going to use the asset or the token in this way. It behaves in a predictable manner, right? And those, I think, are the things that we will start to unlock. But I do think actually, because of that potential benefit, it's worth investing the time and effort. I mean, just one stat, right? Private markets assets, in other words, assets not tradable today, are at least 4 times the value of public market assets today, right? So you think about the benefits potential to the capital markets and the global economy of making those tradable. I mean, that could be really significant. So I think if we keep our eyes on the target here, keep our eyes on the future, then there's a big potential.
Great. Do we have questions from the audience?
A question. Everybody seems to agree that we need common standards, common ways of working together. There are hurdles, but everybody seems to agree that the path ahead is to have common set of standards, definitions, taxonomies. I would like to reverse the questions. What are the hurdles not to get there? Because everyone seems to agree that the way ahead is just to have common standards wherever. What is in the way that actually that doesn't allow to get there, or what are the things we need to look into? Sometimes, to advance, you have to get rid of the hurdles more than keep on advancing over them. So what would be there?
Yeah, I think what is important is to make sure that international setting bodies, public and private sector get together. As Nick and I mentioned, ICMA, when it comes to bonds, have done a lot to standardize bond definitions to the extent it's tokenized. Because as you note in a traditional sense, you do have to do a lot of reporting requirements. So when you do the tokenization, you cannot have insufficient details. Otherwise, there will be frictions.
Exactly. Yeah. Yeah, I mean, fully agreeing with you. And also, I think there's been a lot of good work done by different bodies, but maybe in pockets. Yes. And I think what we have yet to do is to bring those together, and also to say, maybe if there's, say, in different regions, 2-3 frameworks have been created, well, how do we take the best of each of those frameworks and align on which one are we going to adopt more widely?
Any other questions?
I also just checked Slido. There is no question from the online audience. Feel free to post your questions on Slido as well if you're watching the stream.
Okay, so yeah, I'd like to wrap up with...
There is one question.
There is? Okay.
Thank you. You talked about standardization. Who are going to be responsible and accountable for the standardization of this technology in the future?
I think the central bank has a big part on it, but it's not alone, right? We have to get together with the market and test everything and build proof of concepts, testing, so this charge gets into the central bank as a mainly responsible for the standards, not only one central bank, but we together as central banks, if possible, we want and need a common thing to get ahead faster, but we need the market to talk to the market, to test the standards, to see if it makes sense in the future. So I don't know if you agree, but I see it's like that.
Yeah, I mean, I think it is a public-private collaboration piece here, very much so. I mean, that's typically what's worked well in the past. It's not like it's not like we never set standards in the past, right? I think we know there's a path here, but people need to take a bit of responsibility and leadership to bring some of those things together. Particularly, I think it's interesting in this space because we're actually seeing a convergence, right? You're seeing a convergence of securities and payments, for example, and there've been historically multiple standard-setting body in that space. So there's almost an alignment of standard setters that needs to kind of happen to be successful, I believe.
Yeah, we are seeing sort of promising signs of international setting body, like for example, in the derivative space, the International Swaps and Derivative Association have come out with definitions on how digital assets are documented, ICMA for bonds, and then OECD in terms of reporting of digital assets. How do you report? There's a framework, there's a format. So until once we get to a scale and they set the standards, we probably see the ease in which tokenization will be issued. Because right now, as we mentioned, there's promising, but the building blocks has to be there. But given that there is sort of client demand in the form of tokenization ecosystem, and I do think that when we reach the stage where there is sufficient scale, network effect in terms of adoption of standards, this is where we'll probably see certain aspect of this being commoditized.
Maybe one other thought on that, and we're just building here, but I also think about it's not just the sort of the standards to like what does a bond look like or those kind of, or how does should the data around a payment be conveyed, but it's also the standards about how we run the platforms that enable that. So in this room we know quite a lot about how you run resilient infrastructures, right? And we need to take some of that knowledge and bring that into the new digital asset space. And just to take one example, I mean, last year the three CSDs, Euroclear, Clearstream, and DTCC, got together and wrote these digital asset securities control principles, which I think were a helpful stage towards thinking about how do you have resilient infrastructures in the new space. More work to be done there, but I think we need to bring that knowledge so that we have kind of scalable and institutional grade infrastructures for this new market.
Great. Let's wrap up with a quick-fire round. Really short, 30 seconds. If you could give one key piece of advice to financial institutions exploring tokenization, what it would be?
One key is I'll get back to the defragmentation. I know financial institutions don't have much choice if the ecosystem is set as they wouldn't know how to defragment. So for them to be at ease, that will be a lot of competition. If this goes the central bank way, is to bring a lot of competitions. The big institutions would have a lot of competitions. They will have a smaller slide of the cake, but it will be a very larger cake. So, and the small ones will have a little bit slice of the big cake as well. So everyone is happy at the end. We see this in peaks. In Brazil, it's possible. It's what we want. We want to bring everyone to a better future. So,
Nikki.
My one piece of advice would be get ready, because this space is accelerating, and all of us have to be ready for it. The good news is that SWIFT and others are here to support you and work with you to achieve success.
John?
Yeah, I think the space here is for those who are not involved yet, it might seem like this is so far off, but as you mentioned that tokenization is here to stay. The issue is how do I make myself relevant and how do I get involved? Because as we speak, the entire ecosystem is slowly changing, and this represents the paradigm shift of the future of finance, because new business model, new roles are being created as we speak.
Humphrey?
I think most has been said. I think not doing is not an option. And I think in the end, if we look at the financial services, there's always a settlement piece that is required. So also look at how things get settled. There's a lot of use cases of a specific problem being solved in detail, but you also need to solve for the cash settlement. The money needs to be moved. And I know the solution. Yeah.
Great. That brings us to the end of our discussion. I would thank you to all panelists, Alessandro, Nikki, John, and Humphrey, for your insights and for sharing your experiences. It's clear that tokenization is no longer just a concept. It's becoming a real financial tool with both opportunities and challenges ahead. Thank you all to the audience for the engagement and questions. Let's keep the conversation going beyond this panel and enjoy the rest of the conference.